This is regarding the principle of appraisal, a course for the real estate articling part in Ontario. So that we're going to start with the first chapter, the appraisal profession. In the case of appraisal profession, we have a bunch of items. The first item is regarding the salesperson and broker. So REBA 2002 prohibits registered salesperson and brokers from providing value opinions to clients or customers when they do not have the right knowledge, skills, judgment, competence, education, or experience. So in that case, registrant should refer clients and customers to obtain services from others, probably a professional appraisers, and also to note that reco errors and omission insurance does not cover registrants for appraisal assignments. So if there is any error or omission done during appraisal, the reco insurance is not going to protect you. Coming to the professional appraisers, appraisers are not required to be licensed by the government of Ontario, and a professional appraiser is generally a researcher who has the knowledge and the know-how, and also has mastered the the process, the the various procedures for evaluating um, the value of a real property. Appraisers doing private practices are also called as fee appraisers. Appraisers may be used for mortgage financing, tax assessment, investment decisions, and also for compensation for expropriation. Expropriation means where government has expressed interest in taking over a property that is owned by by I guess by the owner, and in those cases, the government is going to give sort of compensation, but that compensation has to be based on some appraised value, which is where our professional appraisers come into help. So for the case here, there are a bunch of institutes, like there's Appraisal Institute of Canada, which is one of the premier institute, and provides a lot of tools and tools and courses. The Appraisal Institute of Canada was founded in 1938 and is the National Society of Professional Real Estate Appraisers. The institute is dedicated to serving the interests by advancing high standard for members of the appraisal profession through granting of professional designation. So the appraisals done by the members are respected by courts, banks, and real estate corporation, and also I believe trust companies and all the levels of government. The practicing members are governed by the Canadian Uniform Standard of Professional Appraisal Practice that provides minimum performance standard for ethics, appraisal review, and consulting assignments. The institute, in cooperation with the University of British Columbia, develops and maintains a professional program of study leading to Bachelors of Business in Real Estate and designation as a AACI or PAP or CRA. So PAP refers to the professional appraiser. CRA refers to the Canadian residential appraiser, and AACI refers to the Accredited Appraiser Canadian Institute. So, to rephrase, a Canadian residential appraiser designation allows members to evaluate individual undeveloped residential sites and housing containing up to four self-contained units or fourplex. The AACI, the Accredited Appraiser Canadian Institute, designation allows members to do valuations of all type of real estate, including residential, industrial, commercial, and agriculture. So to start with, the CRA is a first designation which allows only which allows a limited set of capabilities, that is to evaluate individual undeveloped residential sites and housing up to fourplex. And AACI allows members to do valuations for all of the real estate properties, including residential, industrial, commercial, and agriculture. So it's much broader. PAP stands for Professional Appraiser, and again, both ACI and PAP must be experienced in the type of property that they are appraising. So there's also another institute called the Canadian National Association of Real Estate Appraisers, or CNAREA. So Canadian National Association of Real Estate Appraisers is a profit is a national non-profit independent association and certified and regulates real estate property in Canada. It was established to provide an effective membership oriented organization of professional real estate appraisers based on their academic qualifications, training, and practical experience. So in order to in order for somebody to be designated appraiser residential, or DAR, these members can appraise residential properties consisting of up to 4 housing units and non-complex commercial properties that have a residential component. And there's also designated appraiser commercial, or DAC. These members can do appraisals and consultation for all type of properties. So to rephrase, the Appraisal Institute of Canada, or AIC, gives a bunch of credentials. There's one is called as CRA, Canada Residential Appraiser. There's another one called as AACI, and also PAP, which is professional appraiser. Again, continued professional development is a requirement for all the members, and which includes completing 60 credits of continuing education in every 5-year cycle. And also the requirement for AIC, or for any of the designation from AIC, which is the CRA, AACI, or PAP, requires a bachelor's degree. In addition, there is the Institute of Municipal Appraisers, or IMA. So in this case, the member practice in the field of property assessment and related property taxation functions. Designations are member of Institute of Municipal Appraisers, MIMA, and Associate of Institute of Municipal Appraisers, AIMA. So there's first a member, and then there's an associate. So the MIMA designation is the institute's highest standing. Anyone attending to designation is considered as an accredited member. AIMA designation, or associate member of Institute of Municipal Assessors, must be attained before an individual can be considered an MIMA. In addition, there is also a Real Estate Institute of Canada, or REIC. Again, REIC is an educational branch of Canadian Real Estate Association, or CREA. The mission of REIC is to establish, maintain, and promote and advance standards of practice in real estate and related professions. Fellow of Real Estate Institutions, or FRI designation, is awarded to licensed salespersons or brokers who have completed REIC education programs. FRI members who have a minimum of 5 years residential appraisal experience may get appraisal specialist designation. In addition, there is also like MVA residential designation. This is a professional designation for realtors who have demonstrated practical and current experience in the local real estate market and have completed the prescribed education program in the field of residential appraisal. Note that MVA is currently discontinued. MVA designates people who may perform appraisal of residential properties up to 2 units, and a vacant residential land where the highest and best use would be two-unit residential buildings, and we cannot do any appraisals where the purpose of is litigation or where they can be called as an expert witnesses. Um, so there are a bunch of trends and issues that needs to be addressed in terms of appraisal profession. So let's just call them out: trends and issues. So one of the latest trend has been the use of automated valuation models, which essentially is our software programs with that can estimate value, and they are basically used for mortgage lending and mortgage insurance purposes. Again, this is completely automated process. It takes in inputs from a bunch of systems like a GIS, like global information, I'm sorry, geographical information system, um, and but again, it is only used for a low risk. So AVM reduce the need to hire professional appraisers. They are quick and cost effective, and which has also created a competition in the residential appraisers. Again, AVM's valuation models are not new. They have been increasingly used for mortgage lending purposes, and as a result, they complete for appraisal business. But again, they tend to reduce the need for um, an appraiser when it comes to valuing the property for mortgage lending and mortgage insurance purposes. Again, the reliability of AVM can be affected by the nature of the area. So AVM work well when there is sufficient information on the property and the area, and there are a lot of sales, and the properties are relatively similar because there is no manual intervention. But AVM doesn't work well when there is a wide range of properties in an area like large and small, renovated and unrenovated, and relatively less number of sales. Another major drawback of AVM is the lack of physical inspection of the property. So there is no way to figure out what is the condition of the property. Also, AVM cannot judge what what a renovated or a non-renovated property is. Also, there are some concerns with the increased use of AVM with regards to the mortgage fraud when AVM is being used and appraiser is no longer involved. He no longer talks to the owner uh, to get the appointment of the property. So there's a chance of a fraud happening here. So for this reason, AVM is only used for low risk transactions. And but again, they have reduced the need for professional appraisers when it comes to more simple evaluation assignments. So a couple of interesting items with AVM is they are like software programs, but they use computer based valuation methodology that derives a value estimate based on the subject property attributes, recent sales, and various trends compiled for neighboring properties as well as local or regional market. In this case, in the case of AVM, the appraiser is the computer program itself. AVM are proving increasingly popular. Um, and again, the automated valuation model is typically driven by location-oriented data, typically a geographical information system or GIS. Um, the GIS are providing greatly enhanced information to complement existing data layers like physical property details, like what is soil type, terrain, land registration data, survey details, structural description, adjacent road system, zoning, and census data. Now, coming to the another trend with the appraisal profession is this increased competition from AVM has reduced the need for traditional residential appraisal. Um, so what has happened is professional appraisals are moving away from a more traditional point in time um, mortgage appraisals to other type of assignments such as valuation, review, consulting, and management. Now, in case of valuation, uh, valuation generally involves business valuation, expropriation, uh, Insurance calls estimating mass appraisals. Review generally means appraisal review, arbitration, mediation, assessment review or appeal, due diligence and expert witnesses. Consulting means pre-purchase advice, pre-sale marketing, highest and best use, site selection and marketing focus, and management is again with regards to the property management, assert or portfolio management and administration functions related to the real property. So let's look at the appraisal reports. So there are two recognized type of appraisal reports. One is a form report, and the other one is the narrative report. Um, a form report consists mainly of predefined printed information, but it does provide a systematic and precise analysis. So again, there are spaces provided for brief additional comments. The form reports allows for reasonably brief but systematic and precise presentation of information and analysis. There are many different types of form reports being used in the marketplace. I think the ORIA Form 500, ORIA Form 700 is for a single family residential, and ORIA Form 701 is for condominium units. Again, the purpose of form report is normally financing, relocation, capital gain tax, or state sales, matrimonial split ups where there's an out of court settlement involved. So the general layout of a Form 700 is, which is the standard appraisal report for a single family, mentions the client, its contact details, general appraisal and property information, and again, this it says that this appraisal is to estimate the market value for a sale, financing, or whatever purposes, and also has the effective date of appraisal, the date of inspection, and mentions highest and best use, whether it's current or something else. Also mentions the zoning, and also does a bunch of things like subject and market history, neighborhood information, site information, information on improvements, followed by the analysis on the direct comparison approach, uh, does a sales analysis as well, and final reconciliation and certification and final estimate of value and assumptions, and also has a section on assumptions and limiting conditions. Similarly, Form 701 is the standard appraisal report for condominium, which is very much the similar sections. The second type of report is the narrative report. This report takes a logical, systematic, and detailed approach by presenting in writing the theory, fact analysis, application of methodology, and finally conclusions. Narrative reports must be written in sufficient details and in such a way that the reader will easily understand the appraisal reasoning and justification for the conclusion and estimates reached. A narrative report can vary substantially in size based on the type of property and the purpose of appraisal. Narrative reports can tend to be time consuming to prepare, with some ranging from 50 to 100 pages. Again, then it's also used for single family homes, duplexes, triplexes, fourplexes, where the purpose will be for legal and court proceedings. So a narrative report has sections on an appraisal summary, letter of transmittal, title page, table of content, tax and assessment, area and neighborhood analysis, site approaches to value, reconciliation, limiting conditions, and exhibits. Again, in addition, there are also letter of opinions and residential market comparison. Um, so, letter of opinion is a brief, unsubstantiated statement of appraiser's opinion of value or value range. It is not recommended as a method of appraisal. Appraisal reporting and only provides limited information. It is often it kind of creates a bunch of creates a confusion and problems between client and appraisers due to the vagueness of letter of content, a letter of opinion. So letter of opinion is not accepted by any lending institutions. In addition, there is a residential market comparison guide. Residential market comparison guide is ORIA form 260. It is used to is it is used as a so essentially residential market comparison guide is a form designated to show the owner of the property how his or her property ranks in competition to others that are now or have been on the market. Often referred to as a comparative market analysis in various jurisdictions. Canada, this guide is used to determine the probable asking price of the property. The form also contains additional lines to detail anticipated selling price, selling cost, and ultimately estimated net proceeds to the seller. So, so the CMA generally ranks the property in comparison to similar properties in the area which are now on sale or have been sold in the last 12 months or are listed but expired in the last 12 months. Most salesperson would prepare CMA for a seller instead of completing the form report. Now coming to another section, which is value concepts. Now, what is a value? A value is a quantity of one thing that can be obtained in exchange for another. Money is the most common denominator by which the real property value is currently is usually measured. The utility of a commodity such as a property is expressed in the amount of money that would be paid for its acquisition. Value is a present form of the future benefits arising out of ownership of a typical user or investor, and depends on the need for and availability of the commodity. It's the demand and supply. Objective value. Objective value is the direct cost of creating and is most commonly used in the cost approach to value. The reproduction cost is the cost of producing the exact replica with the same materials, while the replacement cost is the cost of replacing the property with one or more equal quantity, equal quality, utility, and using modern materials. Now, there's also a notion of an objective value and the subjective value. Objective value is the value of the property based on the analysis of the cost associated with the reproduction of that property, exact replica of one of equal utility. Replacement cost is most commonly used given the case of obtaining the accurate information. Objective value plays a significant role in determining the value by which the cost value by the means of cost approach. Essentially, two schools of thoughts have arisen with the concept of value. One which is one school emphasizes the objective nature of the value as it relates to the actual production cost of creating the value, which is the cost approach. The other, representing advocates of subjective value, believe that the value exists only in the minds of the potential buyer sellers, and which is why they use the direct comparison method. So to rephrase, objective value is a direct cost of creating, and most commonly used in the cost value to cost approach to value, while subjective value involves the perception of value that is created and exists only in the minds of buyers and sellers. In estimating value, the primary consideration is the present value of the future benefit that accrue from ownership. Most estimate of value rely on the subjective value. It is used in both direct comparison approach and then in the income approach. Now, value in exchange is same as the market value. The probable price at which a commodity trades in a free competitive and open market. That is a value in exchange or the market value. Value in exchange is synonymous with market value. It is a relative form of value since it's based on a comparison of goods and services that an informed buyer would offer in exchange for an economic good. Value in use. Value in use is a value that is used for one specific productivity to an individual. Value in use is a value that is based on the specific productivity to an individual or some unique characteristics or improvements on the property. It represents market value plus an increment representing the extra value to the owner or buyer. From owner's perspective, the value may be higher than the market value as it relates to the particular need for or satisfaction. From buyer's perspective, the property may have features that are important to the buyers. For example, the property may be close to the buyer's workplace or aging parents. The seller may only think in terms of value in use, but buyers may only consider market value. Market value is the estimate of value arising from many market forces, also known as the value in exchange. Estimate of value is done using both subjective and objective method. While selecting comparables to estimate the market value, it is important to consider that there are no unusual circumstances that are under which it's sold in a reasonable efficient market. The difference between market value and the market price would be negligible. So assumption of a market value is highest price. The property is sold for its highest and best use. Open market, the property is exposed to the open market. This factor is most commonly associated with the property with listing property on MLS. Reasonable time, um, necessity or compulsive or not peculiar special circumstances, and knowledge. Now considering the market price. Market price is the sale price of the individual property and is historic in nature. It is driven by the forces of demand and supply. No assumptions are involved as it establishes to negotiation between the buyer and the seller. Now investment value or the commercial especially for commercial properties. Investment value refers to the value of a commercial property from the perspective of a individual investor and is similar to value in use. Investment value is directly related to the cash flows objective of the investment returns. The difference between investment value and the market value largely depends on the assumptions made during estimates. Anticipation. So let's look at the principles of, uh, of value. The appraisal of real estate involves various principles that are either fundamental to the understanding the value or explain how various components of real estate contribute to the value. Principle of anticipation. Buyers usually think in terms of the present worth of future benefits. Value is determined by anticipation of benefits arising from the money or amenities that may be derived in the future. For example, a buyer a buyer considering a home may look at the benefit of having a double garage as a definite benefit, while other buyer may think of it as a wasted space. Each of them is determining the value based on his or anticipated benefit benefits of the property. Balance principle of balance says um, that the value is created and maintained in proportion to the equilibrium attained in the amount of and location of essential uses of real estate. The degree of value of a property is governed by the balance of appropriation of the factors of production, loss, and a valuable result. If there is less services agencies than the neighborhood needs, or more services than the neighbor or or neighborhood can support. For example, when there are too many drugstores in a community, either some of them will be successful at the expense of others, and none will yield or adequate returns for the investment they represent. With individual property, the agents of the factors of production like labor, coordination, capital, and land must be in proper balance in order for to maintain maximum value. There's a principle of change. Value today is valid only today. The principle states that economic and social values are consistently changing and affect value. For example, if there's a layoff in a particular area, then the price of the property will change. So if something was appraised for 285, that might go down to 250. Competition negatively affects the profit and hence the value. For example, assume two builders start the new home project the same, or two hardware store open up in the same locality, then yeah, there would be a competition. Conformity, reasonable conformance to existing standards protects values. There's notion of consistent use, notion of contributions, external factors, highest and best use, and substitution, supply and demand, surplus productivity. And that's all for this video. Thanks. Have a good day. Bye.